Hello, it's Ashley here from the Traders Circle. It's Wednesday, the 31st of July 2019. Just a quick educational video, really. I just want to walk you through this trade opportunity that came to me early this morning. Now, each week I do a pre-recorded call that defines my hot list for the week, basically what currency pairs I'm looking at for the week, and I show you how I set up my alerts and let the market come to me, and then I document how those trade opportunities progress throughout the week, which ones I take, etc. I am in the process of developing a master's training course that will give you a step-by-step guide on how I trade, coupled with a live mentorship program that is going to go live over the next month or so. So if you want to get involved with that, just register your details or interest on my website, and I will let you know when it's available. For now, though, what I'm going to do is just give you a summary on how I build these opportunities. So I go through all the currency pairs, and I go through a process of marking out certain support and resistance lines and trend lines, etc. And I'll go through that in detail, as I said, in my master training course. And then from there, I'm basically honing the market into an area of interest where I then set alerts. And when those alerts go off, I then look at current price action, and depending on what that tells me, I make a decision to take a trade or not. I also make those decisions around fundamental data releases that are due out for the week. So one example is we have a perfect setup that looks great, and ordinarily you would take that technically, but I will not take that opportunity because of maybe high impact news that may be scheduled an hour or two in the future. Another opportunity would be I can take the trade, I can get into profit, I can then take 50% of that profit and move my stop loss to break even prior to the news release. So it's not. So what we have here is the technical analysis, and you work with the fundamental analysis, and your opportunity sort of sits in the middle. So what we have right now is a full week of very high impact data. So I didn't want to take any trades with this pair yesterday because of the impending news release earlier this morning that affected the Aussie dollar. So first thing I do, and I'm not going to go too much in detail here in this call, is I set what I'm looking for is the on the monthly time frame and weekly time frame, the monthly supply and demand zone. So as you can see here on this line, this area of monthly support is a demand zone where it's likely we will see buying pressure come into the market, and you can see that with this rejection on this monthly, rejection in this area here, rejection here, rejection here, 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 and of course that's playing out here as well. Now again, I'm not going to go into too much detail. What I like to do is I'm looking for areas of support and resistance where there are an accumulation where they both touch. So all you have to do is zoom out as far as you can and look to see where support and resistance touches most, and then put your line there. What I then do is double click on the line, and the big institutions like to trade using whole numbers. So for instance, I wouldn't be putting in 68523. Yeah, the institutions will work up whole numbers, so 6850 or 68 or 68 6750. So on the monthly time frame, you're kind of looking at 50 pip increments. Okay. The next thing I do is draw a zone. So with this little tool, I draw across. I draw a zone, and then that zone will be 20 pips above and 20 pips below this whole number. Okay, and that's to cater for areas where they don't quite touch. So what I've got now is a zone and some structure that I can work from. And if we zoom in, you can see, look, that we have areas of support and resistance that are touching inside this zone here. Makes sense so far, right? So the next thing I want to do is draw my trend line on the monthly time frame. So it's pretty speculative. You could have that here, you know, so we've got 1 touch, 2 touch there. You know, there's no perfect science to this. We could draw it here like this. So I've chosen to go with this 1 touch here, 1 touch there. This is more recent than this area, you see. So the more recent the support and resistance, the more recent the trend. I mean, there is speculation whether or not people agree with this, but the earlier the action kind of trumps the past. And I think that's to do with, you know, some people don't have access to data past a certain point. So they're going to do their analysis of, you know, recent data. So more on that subject at a later video. But what I've done here is drawn my monthly trend. So what we can see now is the direction of the market is in an uptrend. So we've got a lower low, a lower low, and a lower low here. So if you look, this is quite an interesting area now, but if you look at this low and look at this low, you will see that this spike down closed above. So when we are referring to lower lows, we want to refer to it with the close. And as it stands, so just move that. As it stands, we haven't had a close below this spike here. So we are in an interesting, you know, on the medium term, it does look like this could break and sort of hover around this area, this demand area here. And if that does break, then we will have a lower low. Yeah. And then we'll be looking at short positions. But at the moment, we haven't broken and closed below this spike here. So we're in a demand zone, so we may be looking for long positions from this sort of area, and that's what I'm interested in. So step 1 is to find your monthly and weekly supply and demand zone, support and resistance zone. Draw in your range, so 20 pips above and below. Find your direction on the higher time frame, the long-term direction on the monthly time frame. So we're in a, you know, so we've got the trend line there, trend line there. So at the moment we are in an uptrend. And then what we do is we start drilling into the lower time frames. So this gives us sort of the first layer of our framework for trading. So we drill into the weekly time frame. And now what I'm interested in is looking for the outer trend line. So we've got the long-term trend line on the monthly time frame. And then as we go down the time frames, we're now looking for what's called the outer trend line. And I guess this could be referred to as like the secondary trend. So the primary trend on the highest time frame is long, so we're in an uptrend. And then on the secondary trend, which is on the outer time frame, the outer trend lines, we could consider this as a downtrend. Now, what we're looking for with the primary trend is this now exhausted, ready to complete the next cycle of, you know, the primary trend, which is up. So that is why we draw the outer trend line. So we've got 1 touch here, 1 touch there. We've exhausted this move down to come and hit this outer longer term trend trend line, which has more impact than the outer trend line. It's a bigger time frame. It's a bigger trend to break, and the primary trend trumps the secondary trend. Okay, so what we can see now is we've come now to touch this sort of area, this demand zone, where the primary trend could now start to come back into play. Now this can take days, weeks, even a couple of months to play out, which is why I kind of like longer term trades, because you've got plenty of opportunities to identify the opportunity and plan your entry point. And even if you miss the entry, you do always get second and third, well, not always, but you generally get second, third, even fourth opportunities to get involved. And sometimes those opportunities give you a better price and the risk to reward's more in your favor. So what I've done there is plot the outer trend line. I'm just going to flick through this now. As we go to the daily trend, at the daily time frame, now what you've got is your kind of intraday trading trend. So this is your inner trend line. This is what's happening right now, and it'll become more clear on the 4 hour. Just zoom in. Sorry about that. So what we've got here is very interesting. So I've plotted the trend line down. We can see that this is our demand zone on the highest time frame. So we don't need to look at the high time frames now because it's written here. We know this is the monthly trend. So to break this is going to be incredibly difficult. It's going to require a severe weakening of the Aussie dollar, and well, you can see this now, but the data that came out yesterday, early this morning, was positive. So what that's done is it's broken this inner trend line, and now I'm looking at getting involved. Now, although we've broken this inner trend, we still need to break this structure here. So on a trend line, you have the low and the high, and as you go down the trend, you've got you're making higher lows, lower. In this example, with it being a trend to the downside, what we're seeing here is you're looking for lower lows, lower highs, lower lows. At the moment here, this hasn't broken this lower high, so we could still continue to come short, even touch. Let's bring this up. We could see something like this. Where we continue on the top side of the trend, but we could see, this could come all the way back to touch this monthly before we get this move up. So this is why you need to remain patient. Let me just remove those. A lot of retail traders think just because it's broken the trend, bang, off we go, we can go long, and actually then it plummets back down here. So for me, this whole zone now, this is where I'm interested. So what I would do now is I would set my alert. I just set an alert here. Okay, so I just pause the video to set my alerts, just to speed time up. So if I click on that and get rid of that now, this is the zone I'm interested in. So this is the monthly supply zone. We know this is the monthly trend on the highest time frame. So this is the long-term uptrend area. So to break this, just get rid of that. To break this, it's going to require some very negative data for the Aussie dollar. Okay, so as we can see, the data that was positive has broken this inner trend line. So what I'm looking for now is I've set an alert above this lower high. and I've set an alert below this candle here. So I just leave this now and let the market come to me. If this alert goes off, I'll be looking for price action. We just look at, so this price action is what gives me the signal to take a long position. So at the moment, I'm starting to get interested in it. If it breaks this lower high, then this trend is now invalid, and we'll be looking for long positions up towards this outer trend. Okay, and if it breaks back below this, we have got what's called a fake out, and then we should just monitor price action to see how it fares, but then we'll likely be getting involved here. So it's good not to rush and get involved too early, because if it does come down to here, we get a better price. We can take long trades if we see bullish price action. From here, from the longer term trend, and obviously get more pips out of that. So always remain patient. So the point of this lesson is I've shown you how I map out the longer term trend, and then I map out the outer trend, and then I'm looking at intraday to see what's happening. I've plotted it around news releases. The news releases, you can see, has come into our favor, and now at the moment what I'm looking for is this lower high to be broken, therefore compromising this trend line, and then I will be looking at price action to take long trades up towards the outer trend line. As I get to 30 pips, I will then take half my profit, move my stop to break even, so this then becomes a risk-free trade. If it breaks below this trend line, then I'll just continue to monitor price action, therefore waiting for the opportunity to go long from sort of these areas here. So I hope this video has been informative. Sorry, I hope you found this video informative, and I'll speak to you in the next video.